Hi, I'm Ihab Jamal, and I'm going to be your instructor for the financial accounting course. The financial accounting course is a very important course for anyone that want to start a career in accounting or want to learn the basics of accounting. In our course, we have the introduction, the accounting equation, the accounting principles and assumptions. Later, we're going to learn about the income statement, the balance sheet. Then we're going to have some transactions to reinforce what we learned in the previous lessons. Then we're going to take some transactions throughout the accounting cycle. Then we have the course assessment. Introduction. Adam has two coffee shops. One is run by Sarah and the other one is run by Ramsey. Adam wanted to know which store is making more money. So he asked both Sarah and Ramsey to prepare financial reports. Both Sarah and Ramsey produced financial reports, but Adam was not able to compare between the two coffee shops. That's because Sarah and Ramsey did not use standards in preparing the financial statements, but rather used their own knowledge in preparing these reports. Now we can define financial reporting as the presentation of a company's financial situation through the preparation of financial statements for the use of investors, creditors, and other interested parties. Banks inspect the financial statements of a company that's applying for a loan to make sure that the company is capable of paying back that loan. Investors should check the financial statements of a company before purchasing or selling its stocks. Management can also use financial statements to gauge its management ability and the company's financial strength. The management can also compare the financial situation of its company with other competitors and recommend improvements in certain areas of the business if necessary. Employees are interested in the financial statement of the company they work for, since the financial statement will show the company's profitability, and that will allow them to ask for higher wages and better benefits. We have 5 financial statements: the income statement, the balance sheet, the cash flow statement, the statement in changes in stockholders' equity, and statement of comprehensive income. We will concentrate on the income statement, the balance sheet, and the cash flow statement, since these statements are required by most jurisdictions. We can divide the users of the financial statements into internal users and external users. Examples of internal users are management and employees. Examples of external users are investors. We can also divide the users of the financial statements into direct users and indirect users. Direct users are users that read the financial statements and take an economic decision. Indirect users are users that other people read for them the financial statements and recommend for them an economic decision. We have 2 main characteristics of the financial statements: relevance and faithful representation. Relevance means that the data in the financial statements should be relevant in a way that would allow us to make an economic decision, and we can define an economic decision as an investing or a lending decision. Faithful representation means the financial statements should be free from error, neutral, and complete. Free of errors and complete are self-explanatory, but neutral means that whoever prepared the financial statement was not trying to make the company show more profitability or show more loss. What you see on the screen are factors that can improve the relevance and faithful representation. Comparability. Comparability means that we should be able to compare the financial statements of different companies and compare the financial statements of the same company across multiple periods. Verifiability. Verifiability means that if I took some numbers in the financial statement and added them up, I should get the same total as the one in the financial statement. Timeliness. Timeliness means that the financial statements should be prepared in a timely manner. Otherwise, the data in the financial statements will be obsolete. Understandability. Understandability means that anyone with basic accounting and business knowledge should be able to understand the financial statements. We have two main financial reporting standards that accountants can use to prepare financial statements. The IFRS, which stands for the International Financial Reporting Standard, and the US GAAP, which stands for the US Generally Accepted Principles. The IFRS is developed by the International Accounting Standard Board, and the US GAAP is developed by the Financial Accounting Standard Board. The US GAAP is used mainly in the US, and the IFRS is used in the rest of the world. Since investors like to invest internationally, the US GAAP is converging into the IFRS and is expected that both standards will be the same in the future. In the US, the SEC is the agency that's responsible for overseeing the compliance of companies with the financial reporting standards. Well, that's all for today's lesson. Thank you for watching and have a great day.